Australia's central bank keeps rates unchanged at 4.35%. The Reserve Bank of Australia, RBA, has made the decision to keep its benchmark interest rate steady at 4.35% for the 8th consecutive meeting. This decision comes as the RBA observes significant developments in the country's economic landscape, particularly regarding inflation trends and economic growth projections, economic context, and decision rationale. The central bank's latest statement acknowledges the notable decline in inflation since its peak in 2022. However, it also highlights that underlying inflation remains at an elevated level, presenting a complex challenge for policymakers. The persistence of high underlying inflation implies that core price pressures are more deeply embedded in the economy, making it difficult for inflation to return to the target range swiftly. Inflation, trends and projections. Despite the substantial fall in headline inflation, the RBA's concern about underlying inflation is critical. This metric, which strips out the most volatile price movements, offers a clearer view of long-term inflation trends. The central bank's forecasts suggest that underlying inflation will not sustainably return to the 2%-3% target range until 2026. Such a projection indicates that the Australian economy might continue to experience above-target inflation for the next few years, necessitating careful monetary policy management. Global economic influences. The RBA's policy decisions are also influenced by global economic conditions. Factors such as international trade dynamics, geopolitical tensions, and global supply chain disruptions continue to impact Australia's economy. The interplay between domestic economic policies and global economic developments adds another layer of complexity to the RBA's decision-making process. Consumer and business reactions. Consumers and businesses in Australia are closely monitoring the central bank's policies. The continued high interest rates may affect borrowing costs, impacting consumer spending and business investment. However, a stable interest rate environment provides some certainty for financial planning, helping households and businesses make more informed decisions about their future expenditures and investments. Policy implications and future outlook. Looking ahead, the RBA's approach will likely remain adaptive to evolving economic conditions. The central bank has indicated that its future decisions will be guided by ongoing assessments of inflation, economic growth, and labor market conditions. As underlying inflation remains a critical concern, the RBA's policy stance will focus on achieving a delicate balance between price stability and economic growth. Conclusion: the RBA's decision to keep the benchmark interest rate unchanged at 4.35% underscores the central bank's commitment to managing inflation while supporting economic stability. The nuanced approach highlights the challenges faced by policymakers in navigating a complex economic landscape marked by persistent underlying inflation and global uncertainties. As the RBA continues to monitor economic developments, its policy decisions will play a crucial role in shaping Australia's economic future.